Are you prepared for one of the most unexpected twists in the global currency scene? What I am about to share could reshape how you see the foreign exchange market in 2025. Both the Iraqi and the Vietnamese Dong are making headlines right now, stunning traders, investors, and ordinary people who never imagined these currencies would rise so sharply. In this video, we'll unpack what's happening, why it matters, and how it could impact anyone holding these currencies today. Stick with me until the end, because the insights ahead might reveal new opportunities as well as risks that often go unnoticed. So grab your coffee, settle in, and let us dive into the shocking story of how the IQD and VND are shaking the Forex world this year. The Iraqi Dinar, or IQD, has long been at the center of speculation and debate. But what we're witnessing in 2025 feels different. In just a matter of weeks, the dinar has gained strength against the US dollar in ways that caught experts off guard. To put this in context, the rate has shifted from roughly 1,470 per dollar in past years to about 1,320 today. While that might sound like a modest move to casual observers, in Forex, a 10% shift is massive. It signals bigger forces at work and has already pulled in fresh attention from both everyday holders and seasoned investors. Suddenly, the dinar isn't just a rumor-fueled plate, becoming a currency that markets are taking seriously. So what's driving the Iraqi dinar's climb? The heart of it is oil. Iraq continues to be one of the world's top oil producers, and petroleum remains the backbone of its economy. With oil prices steady between $75 and $80 per barrel, the country is bringing in billions in revenue. Exports have averaged 3.3 million barrels daily, giving the government nearly all of its income. With this level of stability, Iraq's central bank has greater leverage to back its currency. This is one of the main reasons why the dinar is flexing its strength in 2025, surprising markets at a pace very few anticipated. But oil only explains part of the story. Iraq has also seen an improvement in political stability compared to the turbulence of past years. Investors are starting to trust the country's current leadership, which has been pushing reforms to strengthen its financial system. Initiatives aimed at modernizing banking and partnering with international institutions are laying a stronger foundation. Together with oil revenue, this mix of stability and reform has created a powerful environment for the dinar's rise. And the impact isn't limited to Baghdad's being felt across Forex markets worldwide. Now let's turn to Vietnam, where the Dong is also delivering surprises. Unlike Iraq, Vietnam's rise isn't tied to oil or one single resource. Instead, the Dong is backed by one of Asia's fastest-growing economies. Last year, Vietnam's GDP expanded by more than 6.7%, putting it among the top performers in the region. The country has transformed into a manufacturing hub, with companies shifting production from China to Vietnam. Tech giants like Samsung and Apple suppliers, along with major textile producers, have anchored themselves in the country. This wave of investment has fueled exports and jobs, giving the Dong a serious push upward. Vietnam's export sector has been nothing short of impressive. In the past year alone, exports crossed $370 billion, marking a 15% jump compared to the previous year. The range of goods is wide, from electronics and textiles to agriculture, showing that Vietnam's success isn't built on one product or market. That diversity is critical because it makes the Dong less vulnerable to sudden shocks. Investors have taken notice, and institutional funds are beginning to view the currency as a legitimate emerging market play. It's no longer just a side note. It's a currency backed by a multi-engine economy. At the same time, Vietnam's government has been disciplined with its approach to currency policy. Rather than chasing quick wins, the State Bank of Vietnam has managed the Dong cautiously, letting it strengthen at a steady pace. So what does all this mean for currency holders in 2025? For those holding IQD, the stronger exchange rate is clearly good news. Your money is worth more than it has been in years. But the risk is just as real. The dinar remains tied tightly to oil, and any major shock, whether from falling prices or political unrest, could erase these gains fast. That is why it is essential for dinar holders to stay alert to oil markets and domestic stability. For Vietnamese Dong holders, the picture looks steadier and more long-term, though not risk-free. Vietnam's diversified economy makes the Dong less volatile, but it's still subject to global pressures. This also brings us to one of the most common myths, that currencies like the IQD or VND will suddenly skyrocket overnight, making holders instant millionaires. That's not how currency markets work. Real appreciation comes from fundamentals: oil revenue and reforms for Iraq, exports and manufacturing for Vietnam. Hoping for magical overnight wealth is both dangerous and misleading. The growth we're seeing today is the result of years of progress, not sudden miracles. And that's the key takeaway for 2025. Currencies move slowly, often unpredictably, and always in response to real-world economics. For anyone holding these currencies, having realistic expectations is critical. Gains are possible, but they can reverse quickly. Even experienced traders, with access to massive amounts of data, often misread timing. That's why holding IQD or VND should be part of a balanced strategy, not your entire financial plan. You also need to think ahead about how and where you'll exchange these currencies. Not all banks or services deal with them, and many rely on specialized brokers. Rates can shift daily or even hourly, meaning your timing will heavily impact your outcome. Another detail often overlooked is taxation. In many countries, profits from currency exchanges are considered taxable income. For anyone holding large amounts of IQD or VND, ignoring this could result in hefty tax bills later. Being prepared with guidance from a financial advisor or tax professional can help avoid nasty surprises. Planning ahead on these practical issues is just as important as watching the rates themselves. Looking to the future, Iraq's outlook is tied largely to oil. If the country can sustain production and avoid disruptions, the dinar may continue to climb. Long-term reforms aimed at diversifying the economy could provide an even stronger base. But risks remain: instability could easily drag the dinar back down. That's why analysts remain cautious, even as they acknowledge the recent highs. Vietnam, however, appears to have a clearer growth path. Expanding manufacturing, investments in infrastructure, and rising technology adoption give the Dong a strong runway. Risks like trade disputes or downturns still exist, but overall, the VND's trajectory seems more predictable. One fascinating difference we see in 2025 is the type of interest each currency attracts. The Iraqi dinar has mostly drawn attention from individuals, small investors hoping for gains. In contrast, the Vietnamese Dong is increasingly attracting institutions. Large funds are adding VND to their portfolios, creating steadier long-term demand. That institutional backing sends a strong signal that the Dong is becoming a serious player in global markets. Still, whether you're holding IQD or VND, the key remains the same: staying informed. Don't base decisions on hype or rumors. Follow credible reports on oil production, political reforms, manufacturing growth, and trade policy. The more knowledge you have, the smarter your choices will be. Holding foreign currencies can be exciting, but it's never without risk. It should always be part of a broader, diversified portfolio. Never gamble more than you can afford, and always weigh both sides, the opportunities and the risks. So here we are in 2025, watching two surprising stories unfold in the Forex market. Iraq's dinar is climbing on oil strength and reforms, while Vietnam's Dong is gaining ground on economic expansion and manufacturing success. These moves won't make you rich overnight, but they prove one important lesson: real fundamentals matter. For those paying close attention, this is history in the making. And with the next chapters still to be written, the journey of the IQD and VND is only getting started.